So then the question is, what percentage of Bitcoin, how fast will Bitcoin continue to grow in this basket? Now we can see in recent history, Bitcoin's been going up by about 50% a year, and we think that will continue for a while. Now that will go down over time, and it will continue to go down. But what we understand is when we understand these technology cycles, using an S-curve, we know the biggest move is right here in front of us right now. So we have about the next 5 years to capture this massive, massive run-up, which is why we have a 5-year plan, okay? And we believe that by the end of that run-up, in about 5 years, Bitcoin will be about the same size of global store of value assets as gold. Bitcoin and gold will be about on par, about 20 trillion each.
One of the most progressive voices in the modern finance industry is Mark Moss. He's alerting us to the significant changes taking place in international markets at the moment thanks to his decades of experience and deep knowledge of macroeconomics. According to Mark, we are about to enter a new era in which decentralized assets like Bitcoin, precious metals, and alternative investments will influence how wealth is created in the future as the conventional financial system teeters on the brink. For those who are ready, Mark Moss sees a huge opportunity in a world where central banks print money indefinitely and inflation threatens to destroy savings. Remember to click the subscribe button and enable notifications to ensure that you never miss our most recent analysis. Thank you and enjoy the video.
And so we have this certainty, all right? We have mathematical certainty, number one. Number two, we have scarcity and demand. So because Bitcoin is finite, all we have to do is understand the demand side. And as long as governments print more money, which seems like a pretty much a certainty, and governments continue to want to increase censorship, then we can see that the demand will continue to rise. Now, we can understand the growth trajectory if we zoom out, and a lot of you are like, oh, Mark, it's just too volatile. It is, yes, but to the upside. So if you look at this path, you can see the projection. Now, it goes up and it comes down and up and down within this band. Okay, then we want to understand the growth trajectory. So I kind of showed you the history, but where is it going? Well, we can understand if we look at store of value assets, places that we park money. We save money in Bitcoin, in gold, collectibles, equities, real estate bonds, and money. So we have your savings. In 2010, that was valued at $387 trillion. 2010, 387. By 2020, this basket of goods was worth $852 trillion, from 330 to 850. Why? Why is that basket of savings, gold, real estate, equities, why is it getting bigger? It's getting bigger because it's where value is stored. And as the wealth of the world continues to grow, as governments continue to print money, these baskets grow from 380 to 852. Okay, so we can see that growing. Now, if we project that out based off of run rates, based off of what the government projects they'll continue to have deficit spending and so forth, we can project out from 2020 to where these basket of goods will be by 2030, and this $852 trillion basket will grow into 1.67 trillion or 1.6 quadrillion dollars, okay? So then the question is, what percentage of Bitcoin, how fast will Bitcoin continue to grow in this basket? Now we can see in recent history, Bitcoin's been going up by about 50% a year, and we think that will continue for a while. Now that will go down over time, and it will continue to go down. But what we understand is when we understand these technology cycles, using an S-curve, we know the biggest move is right here in front of us right now. So we have about the next 5 years to capture this massive, massive run-up, which is why we have a 5-year plan. Okay, and we believe that by the end of that run-up, in about 5 years, Bitcoin will be about the same size of global store of value assets as gold. Bitcoin and gold will be about on par, about 20 trillion each. Now, when we have a new financial asset, it's a new building block that allows us to build new things that we couldn't build before. When we all of a sudden had steel, we could build things we couldn't build before, like skyscrapers and bridges, right? And now we have a new financial asset. And this is what allows people like you and I to do the same playbook as the 1% are doing right now. Why? Well, number one, we have mathematical certainty. So we have digital scarcity. So we know that the Bitcoin supply goes up, there will never be more than 21 million. And we know the issuance of that. So every 4 years, the issuance of that Bitcoin that it caps at 21 million goes down, gets cut in half every 4 years. Okay, but that's why this is the cheat code. It's the first asset that's going up this fast, and it allows us to do things that were typically only reserved for the wealthy that have a lot of money. Okay, so now that we have this new asset, this new cheat code, what kind of strategy can we deploy? Well, let's take a look. So number one, because we have this growth potential, what happens is historical growth rate equals self-repaying. What does that mean? So we want to, instead of selling assets, we borrow against the assets, right? So as long as the asset is growing faster than the rate of borrowing costs me, then it's basically self-repaying. If I have an asset going up by 50% and I can borrow against it at 15%, I have a positive carry of 35%. I can do that forever. Number two, divisibility. With an asset like Bitcoin, I can borrow against small portions of it, unlike real estate. So with real estate, you have $1 million building, you have to refinance the $1 million. But what if you just need 50 grand? But you still got to refinance the $1 million, but I don't want to. That loan is good. I don't want to deal with the hassle. Okay, with Bitcoin, I can borrow against, I can take 5,000 or 10,000 or 50,000 or 100, whatever divisibility that you want.
According to Mark Moss, traditional finance is about to collapse. The wealth building techniques that were previously exclusive to the top 1% are now accessible to everyone for the first time. According to the outdated retirement plan, you should save for 40 years, sell off your assets when you retire, and hope that you don't outlive your money. However, there is a more intelligent approach. You can borrow against your assets without ever having to sell them and pay taxes. Bitcoin is the ideal asset for this strategy because it is digital, limited, and accessible around the clock. Complicated paperwork and market hours are not issues for you. As your Bitcoin keeps increasing in value, you can almost immediately unlock liquidity. Additionally, the wealth you're accumulating is tax-free because you're not selling. By using this tactic, which Moss refers to as the cheat code, you can get around the system that's meant to keep you reliant. It speeds up the process of creating wealth and allows you to transfer it from one generation to the next without ever having to sell your Bitcoin. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
Okay, so if we compare this, remember this is the old way. We don't like that. Selling assets for income, paying taxes on withdrawals, depleting principal over time, so you die with zero. Hope you don't outlive your savings. Heaven forbid you live longer. Vulnerable to market timings, 40 years. That's a non-starter. So the strategy, the cheat code strategy, the 5-year retirement is allowing us to keep our assets so they continue to grow over time. They continue to grow for the rest of our life. And even better, when I die and pass them on to my heirs, they keep growing for them. Okay, number two, we can borrow against our assets tax-free. So over here, when I sold my assets to pay for my life, then I had to pay the taxes. Remember, all that money in my 401k was growing tax-deferred. But when I pull it out, I got to pay taxes. Over here, instead I borrow against the asset, and that money is debt, so it's tax-free. I don't pay any money on that. Over here, I never deplete my principal. My principal continues to go up and up and up forever, which means I can pass wealth to the next generation. I don't have to hope that I die earlier than my money runs out. Instead, I can live forever. My assets live forever, and that value gets passed to future generations. It's immune to market timing risk. We don't have to worry about if the stock market's going to plunge for 15 years because we're not selling the asset. We don't need to sell at a high point or a low point. We're not selling it. We're borrowing against it. And this allows us to have a 5-year implementation time frame, even if you start right now. We're going to break down the math for you. So let's take a look at this. Okay, so for the 5-year blueprint, 3 simple steps. Step number 1, start getting some Bitcoin. You got to have some Bitcoin to do this. So strategic accumulation, a couple ways you can do this. Obviously, number 1, just go buy it. We call that lump sum buying. Number 2, you can dollar cost average into it. Every 2 weeks, some of your paycheck can go into it if you want to do it that way, or you can just go buy some right now. I don't want to get into the ins and outs of which one is better. They're both good. It depends on what you're trying to do. But if I have one Bitcoin right here, it's worth about 100,000 today, and I wait until 2030, 5 years from now, I would then borrow against it $111,000. That's 13% of my total value. I'm going to borrow 13% LTV. I borrow $111,000. $11,000 of that goes into an interest reserve account. It sits in an account and it makes my payment for me. That means I have $100,000 of free cash flow. I don't pay tax on it. I can spend that $100,000 however I want. And what this will allow is every single year in perpetuity for me to pull out $100,000 tax-free to live off on. So if this model holds, and I can break it down for you why I think it does. Again, we'll link to that down below. You could have one Bitcoin, about $100,000 today, and in 5 years from now, pull out $100,000 in perpetuity. Now let's compare this to what the traditional financial model is. Remember, half of the baby boomers who have money have about $200,000. They're being told they can pull out about 4% per year, heaven forbid the markets crash, which is about, $8,000 or $9,000 a year. Versus this, the $200,000 would get them $200,000 a year. So would you rather wait 40 years, save up 200 grand and have 800 a month, or, 9 grand a year? Or would you rather have 200 grand and pull out 200 grand a year in 5 years? Obviously, the answer is pretty simple.
According to Mark Moss, the conventional financial model, which entails saving money, working for decades, and hoping that you don't outlive your savings, is flawed. This outdated approach requires people to pay taxes on withdrawals, sell off their assets in retirement, and gradually reduce their principal. Making sure you don't run out of money before you die is the aim. But this model has a serious flaw in that it doesn't account for how long you might live or how market fluctuations could deplete your savings. It's basically a survival gamble. Mark presents a different approach to wealth accumulation that he refers to as the cheat code. With this approach, you can keep your assets and see them increase in value over time rather than selling them to make money. You don't have to sell anything when you use Bitcoin, a digital asset that is limited and liquid at all times. As an alternative, you can access liquidity by taking out a tax-free loan against your Bitcoin while maintaining the principal. Because you aren't selling, this strategy eliminates the need to time the market, whether it is rising or falling. Your Bitcoin keeps growing and can be inherited by future generations since it is still in your name. Mark emphasizes that by using this method, you can borrow against your assets and avoid paying taxes, so your wealth will continue to increase even as you spend it. This approach gives you a guaranteed cash flow without requiring you to sell your assets and guarantees that your wealth is impervious to the risks of market timing. With this arrangement, you can keep accumulating wealth for the remainder of your life and transfer it to your descendants without fear of financial depletion. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.